Zach's Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. What's your stock price target? We're going to find out because we're going to find out how to screen for it with our top stock screener, Kevin Matras, who joins me once again. And we haven't talked about this particular topic in a while, have we?
Yeah, it's been some time. I thought now would be a pretty good time to talk about it since the market has recently run up, sans today. But, you know, a lot of people have a lot of different opinions on the market right now. Some people think that the market may be running out of steam, and if that is the case, people naturally want to know how much more room their stocks possibly have to go. And there's other people who believe this market is just going to keep on powering forward. And again, those people want to know, how much more room their stock has on the upside as well. But regardless of what your market outlook is, everybody wants to better understand, what these price targets are. A lot of price targets that are out there are nonsense anyways. But there is a very clever way to figure out what your price target is. That's what we're going to be talking about today. Now, let me say, though, there's really a couple of ways to figure out price targets. You can do that through the use of technical analysis. You can also do that through the use of fundamental analysis. We are going to be focusing in on the fundamentals for today's piece.
All right, so tell us how one would go about creating a price target on his own.
We are going to be doing this by using the PE ratio to calculate it. And what's interesting is that a lot of people will use the PE ratio as a way of being able to determine a company's undervaluedness or overvaluedness. But you can also use the PE ratios to calculate a price target. Let me show you how.
All right.
Check it out.
Yep.
First off, the two most common PE ratios used are the PEs using the trailing 12 months or trailing 4 quarters of earnings, and the other one is the PE ratio using the F1 or the current fiscal year estimates.
Okay.
Let's go to the next slide here. Now, the calculation for the PE ratio is simply price divided by earnings. So, for example, if a stock's price is $30 and its earnings are $1.25, its PE ratio would be 24. However, if that stock's earnings rose to $2, the PE ratio would now be lower at 15. And the calculation is $30 price divided by the $2 earnings, which is a 15 PE. Now, the most logical conclusion is that since people had just been willing to pay 24 times earnings, they probably should continue to be willing to pay 24 times earnings, especially if they believe the growth projections indeed are going to come to fruition. And that is why this makes so much sense by using the PE ratio, because by seeing the differential, you can calculate where that price should be. Moreover, if let's just say that you expect the company's earnings to grow even more than what is presently projected, you can see something what's known as multiple expansion, and then you can even guesstimate that the price target should go even higher because you're anticipating an even higher multiple down the road.
Interesting.
Yeah, it is, and you're going to find that typically the PE using the actuals is higher than the PE ratio using the F1 estimate, and that is the dynamic that makes this strategy work.
And why would that be?
The reason why that is because you have a dichotomy between the uncertainty of projected earnings versus the certainty of earnings that have already been released to the market. So as the projected earnings start coming to fruition, right, months pass, quarters pass, and you see that the company is meeting their projections, you'll start to see the price rise, which means you're going to see the PE ratio rise. And as those the certainty of earnings become clearer, that's when you see those two PE ratios come together. So that's why it makes sense.
And what's the calculation for figuring out the price target?
Yeah, let's pull up a slide for this one.
All right.
Okay, so check it out. The calculation is price times the current PE divided by the forward PE. That equals the future price or the price target. So check this out. Let's say that a stock's price was $50, its current PE was 20, and its forward PE was 15. That's 50 times 20 divided by 15, which equals 66.50 price target. Another way of saying that is 15 goes into 20 1.33 times, so 50 times 1.33 equals 6650.
I'll take your word for it. How about the parameters for the screen?
All right, check it out. The parameters for the screen is this. We are looking for companies that have a PE ratio less than the average PE over the last 5 years. I want to see the stock's PE to be less than the average because this shows that there's room for it to grow above its historical norm, okay? Then I want to see the price target to be 1.2 times the current price. In other words, the price target has to be a minimum of 20% higher than the current price. And for added added value, we are looking at companies that have a Zacks rank of less than or equals to 3, which means a strong buy, or hold.
All right, stocks that came through.
There were a bunch of stocks that came through, not too many, but there was about, I think it was like 60 stocks that came through.
There's never too many, are
Yeah,
there?
well, I guess there can be if you screen for nothing, right? There was about 60-some stocks. Here's 5, very diverse set of industries. Avis Budget, Hawaiian Holdings, Helix Energy, Interactive Corp, and Ultimate Software. All of these companies look pretty interesting, but they all have potential price targets, a minimum of 20% above their current prices. Fundamentals look good. Very interesting stocks to put on your radar screen.
But do you own any?
Not on that list.
Okay. Do you need a text version of this week's Screen of the Week that we just went through here with Kevin? Well, we can help you there too. If you go to our webpage, Zacks.com, that's our homepage. If you're not there already watching this video, get there. Scroll down the page until you see Kevin's picture, and next to it is the headline for this particular screen that we were talking about. And you click on that link and it takes you right to the text version of this week's Screen of the Week. And if you want to know more about the Research Wizard, that's the tool that Kevin uses to achieve all of these screens, then you should go to Zacks.com/researchwizard. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.